Oh, hello everyone, it's Susie, Crypto Granny here. I hope you're all well, looking after yourself, being kind to yourself, being kind to your parents, your family, your beautiful friends, your beautiful putty cats, whatever animal you have, whether it's a bird, whether it's a dog, and just being kind to everyone in the world and to yourself, and even to strangers, just to make this a better place. Just got up here, this is on my website, some of the courses that I'm offering, and they're really good courses, particularly this one here, fantastic course. But anyway, look, I got back, I was on holidays for 3 days, just 3 days. I got back and XRP, obviously with the SEC, had come out and that literally dropped about, 50% or something. So I'm really sorry for all the XRP holders out there. The SEC, Securities Exchange Commission, which is supposed to protect retail clients, you, me, and anyone that's not a corporate or professional or a sophisticated investor, is certainly not doing that. They've actually made things a lot worse. So with obviously what they've come out with in terms of XRP stating that they're going to look at whether it's a security. There's been a total lack of information and legal clarity about this for some time in terms of crypto land, particularly in the US. And I just think the SEC is just way behind the curve and just has not got a clue and has no idea, seriously. And the fact that they're trying to use fiat regulation, securities regulation, and apply it to crypto assets when crypto assets are so totally different to any other type of asset within the fiat market, I just can't believe it. It to me, it just begs disbelief. Seriously, I just think, that they just lack experience and honestly have no idea about markets. Honestly, that's just typical of regulators. They just have not got a clue. So with that, let's just go through and let's have a look at what we've got here. So basically, when I was on holidays last week, the SEC claimed that XRP is a security and that Ripple has been selling it, XRP clearly, without registering it as a security and raising 1.3 billion in the process. So they're effectively suing Brad Garlinghouse and Chris Larson, and essentially they've been saying that XRP has been illegally marketing to the retail client. So you, me, not the sophisticated investor, as I said, or not the corporate client. And because of that, with that coming out, obviously XRP just plummeted. Now, Jay Clayton resigned for some reason, and it looks like this fellow, Elad Roisman, is going to be appointed the acting chair of the US financial regulator. But honestly, I just find this regulator unbelievable, seriously. I cannot believe they are way behind the curve in terms of other countries, whether we talk about Italy, whether we talk about the UK, whether we talk about Switzerland, whether we talk about Japan, where they all see XRP as a currency. Some even, other countries may even see it as a commodity, but clearly they see it as a currency and it's being used as a currency. So the SEC has obviously filed the lawsuit, and Brad Garlinghouse, the CEO of Ripple, has responded accordingly. He said there's no clarity, which is absolutely right. Their arguments are absolutely illogical, which I agree with, and I just think they have no experience in terms of the crypto asset market, that's for sure. So obviously they're trying to apply XRP to the Howie test, which originally came, from the 1933 and then to the 1946 Supreme Court. It's well over 70 odd years old, and honestly, whether you can apply any sort of digital currency to the Howie test, again, to me, beggars belief, honestly. So the thing is, what they're saying is if it is security, it should have had a prospectus outlining all the risks to the retail client, just like a prospectus for the bond market or just like a prospectus for the equity market, okay? And, I agree with XRP that, it doesn't need a prospectus, and I just think the SEC is totally wrong. Not because I'm holding XRP, not at all. I just, know a lot about different markets, and I don't agree with them, particularly when they said that Ethereum and Bitcoin are not securities. And the reality is, if you look at who controls those basically those technologies in terms of mining, you've got five large miners out of China that control 70% of the mining of both those technology systems, and they're exactly the same miners. So again, how do they come up with that? Do they look at proof of work? I mean, it seems to me that they're saying proof of work is not a security. So does that mean every other cryptocurrency out there that's proof of work is not a security? But if you're a proof of stake or something else like a distributed ledger technology like Ripple, technology, that you are a security, it's just so inconsistent what they're saying. And also, they've never had any clarity on regulation for the crypto asset market. And so now they're trying to apply fiat regulation to the cryptocurrency asset market. It's almost trying to, apply, a square block in a circle, if you know what I'm saying. So I just think the SEC, honestly, is just, they don't know what they're doing. And I think from my perspective, they've lost all credibility. That's my view. So essentially what they said, and if you look at some of these, you've got all these references here. They're going, they even, acknowledged that, by the action they've done, they're going to put, substantial harm on innocent holders of XRP, regardless of the ultimate resolution. XRP, will cease transacting or be delisted or suspended on exchanges, and we've already seen that with Coinbase, Bitstamp, Oakcoin, and a few others. And, it's going to reduce the liquidity in XRP, and obviously the values decline. The SEC's, again, as I said, supposed to protect the retail investor or the retail trader, and they're certainly not doing that. And as far as I'm concerned, they've caused more damage than anyone. And when you look at previous cases they brought to the market, previous cases did not have the ecosystem that Ripple has, the technology of Ripple, the diversification of that technology, how many clients use it, how many exchanges use it, and also XRP, the coin, is needed to get the benefits out of the technology. So XRP, the coin, is the utility of that technology. So if you didn't use XRP as the coin for the technology, you wouldn't get the benefits of that technology. In other words, low cost compared to foreign exchange, speedy cash settlement, again, being able to settle anywhere all over the world without needing banks and everything else, and intermediaries and the like. So again, I just think the SEC is completely off its mark and hasn't, and again, I'll say this again, hasn't got a clue. So if we look at the lawyers, there's lawyers that Ripple have employed, and they said the SEC's suit was without merit, and I agree. Haven't got a friggin' clue. Michael Kellogg of Kellogg, Hans, Togg, Fiegel, and Frederick said in a statement, the complaint is wrong as a matter of law. Other major branches of the US government, including the Justice Department and the Treasury Department, FIN, have already determined that XRP is a currency, and that was in 2015. Okay, and now the SEC has come over the top of that right at the end of 2020 and come out with this lawsuit. Okay, the transaction XRP thus falls outside the scope of the federal security laws. This is not the first time the SEC has tried to go beyond its statutory authority. The courts have corrected it before, and it will do so again. Very interesting. That's what Ripple's lawyers said. The summary of the lawsuit reads, from at least 2013 through the present, defendants sold over 14.6 billion units of digital asset called XRP in return for cash to fund the Ripple operations, enrich license and Gallinghouse. Well, the fact that it hasn't, XRP has gone down quite considerably, so it hasn't really enriched those two, to be perfectly honest with you. So the lawsuit, there's 71 pages, and basically it's a multi-year investigation by the securities regulator, okay, and it goes on and on and on to try and prove that XRP is a security, and thus if it is a security, then obviously any selling of that security should have had a prospectus, right, like an equity prospectus for an IPO, initial public offering, or for a bond prospectus, okay. So Ripple's submission says, and I agree with this, and I'll tell you what I think as well, the SEP completely ignores the fact that XRP itself is working with a digital technology and an ecosystem, okay? It is a currency, and it needs to be used with the digital technology of, of RippleNet as such, okay? Also, the SEC is not looking at the ecosystem of Ripple and the technology is incredible, okay? And the technology of RippleNet needs XRP as the utility coin to get the benefits of that technology, okay? And that's pretty much what they are saying. If you look at Ripple's submission, which you can get off Ripple's, you can download, okay, at this PDF here. And they're saying that most of XRP that people picked up, the retail element was, and I believe that rightly so, was picked up in the secondary market. I don't know too many people that picked up an ICO of Ripple. I don't even think Ripple did an ICO going back all those ways years ago. Okay, most people in the retail market have picked it up through the secondary market, not through an ICO. Okay, Ripple go on to say the technology is incredible. They've done 60 million ledgers, never had a problem. It's decentralized. It's cryptographic ledger. It's not controlled by any one person or one party. It's not controlled by Ripple itself. It has validators, it has nodes, it has 1,000 nodes. They don't control a majority of the nodes. More than 97% are independent. There's consensus in terms of the process, and that consensus will then let a transaction go through. Also, XRP is not sold individually to clients by the people at Ripple. Okay, and I think that's the most important issue, but also the utility of Ripple of XRP. Without XRP being used in the RippleNet system, you're not going to get benefits of the technology of that system. Okay, so in my view, I'm obviously with Ripple. I just think these guys, the SEC is completely, off the mark here. And again, to me, it's about money grabbing. When you look at the SEC's annual report, it's all about, how they've grabbed money from people and fined people, and that's how they look at their KPIs, their key performance indicators. Okay, so it's about, each person that works at the SEC, are they increasing the cases? Are they, increasing the money grab? And they certainly have done that. I mean, they've literally taken out of the financial markets about 4.6 billion. So in some ways you could see the SEC as being a profit center, not a cost center. I mean, their key performance indicators are basically about fining people in terms of financial markets, in terms of the fiat market as well as the crypto market, and getting them to pay back. Essentially that shouldn't be their whole criteria. And if you look at their annual report for 2020, it seems to be, that way. So, you can certainly read Ripple's submission. They do talk about Bitcoin and Ethereum blockchains, which I agree with. They talk about just because someone's holding, commodities, they're not responsible for people buying and selling commodities. Retail clients like Exxon, may hold commodities, but it's not responsible for a retail client buying or selling commodities and losing money. And I agree with that statement. I agree with their submission on that. And I don't believe you can compare it to a fiat security or a fiat market, that's for sure, because it's a completely different story. Absolutely. They go on to suggest that the US is an unfortunate outlier, and I think the US is way behind the curve when it comes to cryptocurrency technology, and they've shown it over the years, seriously. And this is why a lot of people are just, going overseas away from the US. They're too litigious in terms of the retail client. They're just way behind the curve, and you cannot stop this sort of technology like RippleNet, which is the best of breed technology. As I said before, the world has a cash settlement problem and it goes into the quadrillions, okay? So we see from the SEC's annual report, they obviously, fined Block 1 a $24 million penalty for unregistered sale of securities. Now, Block 1 actually went with an ICO, and sold it to clients. Ripple never did that, and they got, charged 0.58% of the initial raise, which was very low. Also, it only took about 3 months, okay? But Ripple has never done that, okay? Also, you can read this, and we'll go into the Howie test, okay? And there's this DAO report that you can look at, and there's the thing there for Coinbase, the reference. I won't go into that, but if you basically look at the other things where they've actually had penalties, again, they've gone and had a big money grab. A lot of these smaller companies were just, literally caved in, like Kick, and said, yes, I'll pay the penalty. Kick, it went on for about 2 years, and they ended up paying a penalty of $5 million. Now, Kin is still on the exchanges, okay? Again, Kin was a messaging system. It didn't have the technology that Ripple had, and it was a messaging system, okay? A messaging service targeting teenagers, okay? And, again, that was a white paper. It was an ICO, and basically they end up paying the SEC $5 million. That's my understanding, okay? And there's a whole lot of stuff there and a whole lot of things that, you could look at there in terms of Kin, right? Or Kick, whatever you want to call it, right? And again, even Kin said, the SEC honestly would construe things, put words in our mouth, change things around. And, this is not what, regulators are supposed to do. They're supposed to help people in corporations and retail clients. They're not supposed to be twisting things. So what happened is, Kin, again, paid a $5 million penalty, even though the court ruled against them. And, had to, again, they were able to continue operations, but had to do things within the legality of the SEC, the US Securities and Exchange Commission, okay? They face restrictions and all sorts of things, but they are still on, on the crypto exchange, okay? So again, Kin certainly pushed forward, but they did make a big complaint that, they were just basically, pushing them around and being bullies, okay? And I don't think that's any way to behave, being in terms of a regulator, okay? Someone also, if you look at this from, this is an interesting resource which I had a look at. This was from, here we go, Quora. Again, this fellow, I can't remember the guy's name, but just look at that reference there. Quora.com, will XRP survive? He was talking about, this matters, obviously they've come to the market with other ones, and basically people have settled. We do have headlines here. Bitwise dumps, Bitwise Asset Management dumps XRP because they have retail clients. It's not so much because they're a fund manager, but they actually invest in XRP, and the retail clients will invest in their product. And basically, this fellow said that, marijuana stocks were off, a couple of years ago. In 2018, the whole market crashed. After an IPO of $300, got to 247, and then came charging back, okay? Some of the other SEC things that, the SEC's gone for is John McPhee. Obviously, they've gone for Kin, they've gone for EOS, they've gone for Block 1 and a few others. And you can have a look at their annual report, and I'll actually tell you who they've gone for. You just call up SEC annual report. And their annual report basically talks about a record-breaking $4.6 billion in fines, okay, from the year before. And, this is their key performance indicator, which I'm vehemently against. Seriously, I mean, if this is what they're focusing on, they should be really focusing on to get clarity with people. and companies about, the crypto asset market in terms of what people are allowed to do and what they're not. There is no, I just think it's a joke when there's no regulation, and there's never been any regulation in the US, and then they're coming along and saying, oh, we're going to sue you and fine you because you didn't, abide by the fiat regulation, which again, the fiat markets, you can't even compare them to the cryptocurrency market. And there's such different risks in the cryptocurrency market, and more than different risks, more risk than all the other markets, put together. So, their first page talks about how many cases they had, how many independent actions they had, what percentage are up. Again, this is their key performance indicator. And my attitude is it shouldn't be the case. They should not have key performance indicators that basically, say, oh, we collected a record-breaking 4.68 billion. I just think it's a joke. I mean, they're basically, a cash collecting department for the government, because the government's broke. Every time the government issues another trillion in deficit, this crowd's acting like a profit center and collecting from the corporates and the individuals. So also we saw Telegram. They blocked Telegram, and money had to be paid to the regulator and also had to be paid back to the investors. But again, Telegram was a message system, as you all know, and they did a proper ICO. Ripple never did an ICO. And most people, as I said, the retail side were actually, investing in XRP, and they got invested at the secondary market level on the exchanges. So have a look at that. It tells you all the people that they've fined, Wells Fargo, Telegram, it goes on and on and on, BMW. It's a whole list, and there's just lots and lots and lots, okay? Even talks about, holding individuals accountable and everything else. If you look at their report, they're talking about, total actions this year, 715 compared to 862 last year. But again, they were more profitable this year. So in other words, they were fining people more, right? So, last year and this year is the dark blue, last year is the light blue. You can see what they're really focusing on here, security offerings, okay? And that's their whole focus, right? And that's pretty much, 4.68 bill. Last year was 4.3. They had less cases this year, but they're actually charging people more, okay? And you can see, where they got it from. The top 5%, the largest case they got it from, and the remaining 95, they got much less. The top 5% of the largest cases had to pay 3.795, okay, which is a lot of money, billion, okay. So that's huge. And look, they're targeting XRP because they're, the third or fourth largest. Now they're probably, the sixth largest or whatever. And honestly, it doesn't, the old securities law does not apply, okay? It just doesn't. So check it out, the SEC, what they're focused on here. And again, it is securities offerings. And, what I want to do is talk about, what have I missed here? Is talk about basically the Howie test and what I think, and we'll take it from there. So if we look at the Howie test, which the SEC actually applies to decide whether something's a security or not, this was from the Supreme Court in 1946, okay? And the criteria very simply is, number one, a person invests money, two, in a common enterprise, with the expectation, number three, of making money and solely from the efforts of a third party, okay? So basically, in the Howie test, they said that Bitcoin and Ethereum were not securities because they did not fit into the criteria of basically the common enterprise and solely for the efforts of a third party, okay? And, I would actually disagree with what they came up with, because certainly, in my mind, Bitcoin and Ethereum, just because they have a lot of nodes and they are decentralized in that way, what makes them centralized is the power of the miners, who basically 70% of the miners are used by each, Ethereum and Bitcoin, and they basically have to process and authorize transactions on both systems. Also, the SEC has there's just a huge lack of no clarity. And, again, they're trying to apply, as I said before, fiat laws which don't make sense in terms of crypto land at all, and just totally inconsistent. And, it's like there's been no regulation at all, and now they're coming back and saying, oh, yes, there is regulation. You have to use the fiat assets regulation. And again, as you all know, crypto assets are completely different, okay? So if we go down to the next slide, what do I think? To be brutal, the SEC has no idea. They're totally out of depth. They are trying to apply, as I said, fiat security laws, the crypto asset market, which are entirely different asset classes, with technologies, some technologies that are groundbreaking, like XRP and the Ripple ledger, okay? New technology, which is groundbreaking. Ripple's technology has ran well over 60 million ledger transactions with no hacks or no problems. The ecosystem of Ripple is wide and distributed, decentralized, near 1,000 nodes. The SEC is trying to protect the retail client with this disclosure, yet the retail client is not investing in Ripple. It is very clear there has never been ownership in Ripple, the company. So what would the average person in the crypto market think? We all know we're not investing in Ripple, the company. We're investing in XRP, which is the utility coin for the underlying technology of RippleNet. Again, I asked the question with the SEC, does it mean that all charities, companies and foundations are deemed to be enterprises when they are not offering, anything like the security in the above, which Ripple is not? Fund managers have had to sell out because they're offering product to the retail client base, not because they are professional clients, okay? The SEC has caused more damage to the retail client they're supposed to be protecting, and they're just not doing it properly as far as I'm concerned. When the worldview is XRP is a currency or a commodity, okay? Again, these guys are way behind the curve, and you have to question what are their motives when the first page of their annual report talks about having a great year because they increased their level of fines from 4.3 billion in 2019 to 4.6 billion in 2020. Seriously, unbelievable. XRP does not give ownership to the entity Ripple, and everyone knows that, okay? Again, even with the Howie test, it says that investors expect a profit. Not necessarily. A lot of us in the crypto market, because we've been in the crypto market since, the exceptional 5 or 6 or 7 years, we know how volatile this market is. It's more volatile than all the other markets put together. We are certainly aware of the risks of profit and losses equally. I would argue that. Seriously, I really would. And I just don't think 0.3 of the Howie test would apply. Also, we know what, can happen in this market, right? How bad it can be. And, a lot of us are not investors. Yes, I have an investment portfolio, but there's a lot of people that trade and speculate in this market that don't necessarily invest, which is a different strategy. An investment portfolio like mine is over, 2 years to 5 years. Trading speculation could be 5 minutes. And the question is, does RippleNet need XRP to give it the benefits of the payment system? Reduce costs, fast cash settlement, being able to settle anywhere over the world, whether you have a bank or an intermediary or not. And I would say yes. Without XRP, you do not get the benefits of RippleNet. So thus, XRP is a utility. Without the utility of XRP, you do not get the benefits of RippleNet. And also, Ripple has never made statements of profit for XRP. Also, anyone can run a node or a validator on RippleNet's technology. No one controls the technology. As I said before, the validators and nodes are 97% are independent. Again, retail clients generally have not bought from an ICO, and that's a fact. Also, as I said before, maybe they're investing, maybe they're traders, maybe they're speculators. XRP's price would go down because a major hack or something wrong with the underlying technology, not necessarily something going on with Ripple, and that's a fact. So most cryptos have not, all their total circulating, all their total supply of coin or token is not yet in the market. So we do see a big difference between total supply and circulating supply. And that's why we see a big difference with Ripple for total supply and circulating supply, because, part of that sits in escrow. But like any other cryptocurrency coin or token out there, a lot of cryptocurrency tokens and coins have a difference between their total supply and their circulating supply. And it's not because the market participants, generally as a rule, are sitting on big lumps of crypto. It's because the founders and the technology is holding, the token or the coin back, or the issuers for the foundation. So it's a completely different market to the fiat market, like equities, where you might get fund managers that have bedded down Apple shares, for example, never to see the light again. And so therefore the total supply and the circulating supply are adjusted with turnover stats, which are provided to the issuer every month, okay, and which are then provided to the exchanges. Completely different market, absolutely different. And I would argue vehemently about this, because they are different markets. And, a token that gives, or a coin that gives utility is not a security, and that is a fact. There are so many different variants in this market compared to other markets in terms of the equity market and the bond market. It's just not even comparable. And that's why I think the SEC is just right off here and hasn't got a clue, seriously. There was no dealer panel. XRP, to my knowledge, wasn't sold as an ICO, and most of the retail clients bought it secondary. So in my mind, the SEC has not got a clue, honestly. And, it's not well thought out or anything. And honestly, they could literally come out and sue anyone. And, another technology that copied Ripple's technology was Stellar. And, Stellar will be the next one that they'll look at. And, then it could go on to any other cryptocurrency coin or token. And it's not, again, they're basically stopping technology and advancement. And I just, I can't believe that, they can be so clueless. Anyway, guys and girls, enough of me. I hope that was clear. Please do look after yourself, and I will talk to you soon. Thank you. Thank you for listening.